Hi, we are at the end of the webinar, but let's go to the beginning of the webinar because we're live and we're getting started. I do want to say thank you to everybody who has joined us today. I'm very glad to be here. I can't speak too much, but I have a feeling my friend David is very glad to be here as well. It is a busy season, events galore. We understand that everyone's schedule is very packed and very busy. So for those of us that are joining us today, we're very appreciative that you are here. 2023 is in full-fledged. I can't believe it's March 1st. I've blinked my eyes and 2 months have gone by, but there are still some very big pressing digital banking trends that community financial institutions need to be aware of going forward into this year. And I'm very excited today to be joined by my friend David Hall, who's a banking strategy expert and influencer, to really delve into what those are. My name is Jonathan Manasarides. My last name doesn't fit on the title slide, as you could probably tell by the length of how I said it, and I'm a customer marketing manager on Team Eltrapy. I'm super excited to get into it. We have a lot of content to cover. So without further ado, David, I'm going to kick it over to you and you can get us started. Go ahead and introduce yourself and let's tell the good people about these top trends to be focusing on.
It's great, Johnny. Good to be with you again. And good morning, good afternoon, good evening to everybody that we're engaging with today. Happy to be here talking with you. So as Johnny said, there's a lot of things happening. And while it feels, given the fact that we are now at March 1st, we're 2 months into the year, there's still quite a bit happening. And I think as the industry continues to work on our pivots, and as we think about how we adapt, there's, I think what we find is not everything is always cemented, and there's always a need to be aware. And I think that's one of the themes you'll see as we talk through this is the preparation that we go through as an organization and as an industry to prepare for the changes that come. So I'll say really quickly, I've been in banking for approaching 30 years now. I accidentally got into banking. I started as a part-time job as a teller for Bank of America a long time ago. I grew up in Las Vegas, super hot. I did not want to have an outside job, so I took the lazy route and went for an indoor air-conditioned button-up job. So loved it and have loved being in banking and the experiences I've had across a number of organizations. Recently, just about a little more than a month ago, I started a new role at Bank of Hawaii out of Honolulu, which I don't expect anybody to feel bad for me. It's a beautiful place and I love being here. And I really love that our organization is really focused on how do we create and put our customers at the center of our experience, particularly in the digital space, and then leading out from there. So that's one of the things that I really love that I get to do. And then things like this. This is actually one of my favorite things in terms of the responsibility and opportunities that I have. So to your point, Johnny, let's jump in and talk about these things and the trends that we're going through. This is, it's interesting. There's always a number. It's the top 10, the top 5, the top this. Well, I mean, we work through that, and we've got some top items that we're gonna talk about. Again, the reality is that these can pivot and shift at any given time, given so many influences that occur. We have political, and we have socioeconomic, and we have social influences that come into this as well, that may pivot and change. And I think that at the core of this is one of the most critical things I would love for us all to take away is that in our preparation for all of these things, there's probably two main components. One is that we are customer focused and centric in what we do, and that we are building and developing capabilities in our organization to be able to pivot and adapt to those customer expectations. Absolutely. And we have CX squared on here. That's one of the things we're going to jump into. We're going to talk about open finance. Payments is another big focus as that's a landscape that's shifting quite a bit and expected to do more. We're going to talk about leveraging your contact center, staffing. We're going to address TikTok just briefly, and then we're going to talk about fraud. So these are the elements we're going to work through, and certainly feel free to drop questions into the chat as we go through, and we'll do what we can to make sure we address those. And if we don't get to them here, we'll follow up to make sure those answers are provided. So.
Absolutely. And David, just one quick thing for everybody here. You'll notice that some of our slides may be looking a little bit wonky. Fear not, if you do want a copy of the slide deck as well, that is going to be available for download in your portal. So you will also be receiving recordings and whatnot, but we'll make sure to be doing proper follow-up But if the slide deck looks weird, we tried our best. I tried my best, but it's going to be great, and we're going to have a fantastic time. And you can download that slide deck and follow along if you would like as well. So without further ado, let's hop into CX squared. What does that mean?
So CX squared is, we talk a lot about CX, and I love seeing the advent in our industry of a CXO that's come from the fintech space and technology space from years past. So it's customer experience. But I want to take it a step further, because it's not only the customer experience, that's the component of what we deliver after we understand what I believe is probably the more critical of the CX, which is customer expectation. So we're really talking about expectation and experience, and how do we work through that? So as I mentioned before, we really want to ensure that our consumers and their expectations are top of mind. And this can feel challenging and scary because we don't know what to expect, or at least we have thought that in the past. The reality is financial institutions in particular know so much about consumers. And then when you can layer that behavior and demographic insight, when you can layer into that other data sets, for example, around social behaviors, and again, like what's happening in your community or what's happening in your country, what's happening in a particular industry that maybe your bank or credit union serves in your community, these are things that we can understand and do a better job of. So really putting expectations at top of mind. This is a question that I just had, it's interesting, I just had this conversation with a colleague of mine yesterday who is responsible for collecting customer insights around CX. And I shared, most consumers are willing to share more data about themselves because of the bullet point that's here. 87% of consumers say that personally relevant content influences how they feel about a brand, and that they are willing to share more if they believe that they're going to get a more personalized experience. And that's a really important statistic, like knowing that they think that it's important and they'd be willing to share more if they can get something valuable out of it. But the challenge is what's the next bullet point, which is that 26% of consumers say that they're completely satisfied with the level of personalization that they receive, specifically from financial services. So this is a massive opportunity, or it is a massive opportunity for us in this space to do a better job. So the visual on the right really gets to what we do. So I would, we look at those who are really, really great at creating these great customer experiences. You think about, the names that come to mind who are top here are Apple, Google, Amazon, any social media platform. It really is about understanding them, because there's a collection of a tremendous amount of behavioral data. Well, financial institutions have arguably, my argument is, probably the most insightful set of data that you can get on a consumer, on a human, and their behaviors. You can see how they, what their preferences are, what their patterns are, what they love and what they don't. Like, you can see all of those components in how they spend. Amazon does an amazing job of making recommendations to me because of what they see that I purchase with them, as well as some other ancillary data they have access to. But they could do so much more. Like, they would love to have the breadth of transactional data that a financial institution has. They could do so much more relative to that. So that's one of those things that we have to be thoughtful of. And everybody, when I say everybody, a lot of people really trust brands like Amazon to do that, because they know that they've done it and they've handled it well and created value for that consumer. So when you have that financial data, it gives you, as we work ourselves around, clarity into the current financial state and future needs of those consumers. We are a financial services industry. We provide products and services that help enhance the financial situation of a consumer, of a human. And so when we consider that at the base is what we do, the more we understand about them, the better we can leverage. And it's not just about providing products and services. That's what gets to this next one. So we truly understand our customers, so that when we reach out to them, it's informed and it's effective. And it engages because it's educational, it's informative, it also provides products and services. The mistake that a lot of financial institutions make when they purchase a capability, or they partner with, or they develop that capability themselves to leverage transactional data to understand behaviors, when they unlock that, for a lot of institutions, it becomes a Pandora's box. Like, once you open it up, if you're not prepared for it, it can be challenging. And we don't want to use it simply for the fact of, we can use this to expand products and sell services. That it needs to become necessary, but it should also be a broad mix of, again, recommendations, insights, awarenesses, things that are valuable to the consumer. So you develop this trust that they have with you, and you get that deeper engagement. And then the relationship expansion becomes a byproduct of it, because you know them, you know where they're at, you know what their needs are, and you can do a better job of positioning any recommendations to them.
Absolutely.
Johnny, any comments here?
Yeah, the one thing that I would add on to that, we talk about, and I love that you use the words experience and expectation. And I love the fact that you mentioned an Amazon and a Google, because when we talk about customer experience and expectation in the financial space, it's no longer, is my bank better than the next bank? Is my bank providing a better experience than the next credit union, or vice versa? It's how is my experience and expectation stacking up against Amazon or a DoorDash or an Uber? People are in a digital space in this day and age. And so that means the expectations that they want are in a different space. I look at a company like SoFi, where you can open up an account in a matter of minutes and everything is all digitized and ready to go. It's that variation. It's that level of detailed insight and experience and expectation that you get. It's about changing the mindset of, we're not just competing with fellow financial institutions when it comes to the consumer experience and expectation. It's the entire digital landscape that we're competing against when it comes to that experience and expectation. So really having that thought and really changing that mindset to embrace that, that's what's going to lead to that proper circle. And that's what's really going to lead to that deeper engagement and relationship expansion.
And I think the opportunity, that's a great point, Johnny. And I love that you bring that up, because it is about the entire experience. Mm-hmm. And I mean, when we go back to the numbers here, 26% consumers say they're completely satisfied. That means that there's 74% who are not satisfied. Some level of dissatisfaction occurs. And that's because, and the interesting part is that there's already, like it or not, there's kind of a lower expectation around, like, consumers don't know a lot generally about their own finances, but they know that banks and credit unions know a lot about their finances. So the natural expectation is that you should be able to help me. I can't tell you when I was at a former bank that how many times the conversation came up of a consumer or even a regulator that would say, well, you know that I'm going to overdraft. Why wouldn't you help me? Why wouldn't you tell me or give me something, some awareness? So they have that expectation because, to your point, Johnny, of all these other components. But I will say, I don't think that it means that financial institutions have to be at that same cutting edge as an Amazon or an Apple 100%. Or a Google, because the expectations are still, low. And I think that it's lower. So there's a chance for us to do good and do better and still delight customers with what we're able to provide to them. Exactly. Even with the awareness and insight you have about that customer right now. Like, there are things we could do today so much better than we do without having to spend another dollar on a vendor or some new vendor who's going to give us a new capability. It really just becomes about putting that customer at the center of the experience.
It seems intimidating, but it doesn't have to be. You talk about that space in between for growth. You don't have to make up all of that space in a day or in a week.
100%.
You start to make those steps and make those efforts into closing that gap. That's what your members and that's what your customers are going to love the most.
Yeah. And when they see that you're taking those steps, like that's going to already start getting like, okay, they hear me. They understand what I'm looking for. It's huge.
Exactly.
All right, let's move on to the next one. Let's talk about open finance. This is one that has been an interesting thing. I remember somebody told me, this was just last year. Someone made the comment, they said, man, open finance, and it was a white paper, I believe, and they said the open finance had been around for half of a decade. And I was like, wow, that's crazy. Like, that's a long time. And then I actually stopped for a minute and I said, wait a minute, a half a decade is only 5 years. And to have the impact that open finance has had on our industry, thanks to our friends over in Europe and what's happened there, the acceleration of open finance and what it means has, I think, really landed here in the U.S. in a pretty meaningful way. I would even offer that, beyond that, you have, because of other things that have happened in our industry and around finance and people's money, investments and such, that regulation is becoming much more keen around this. And there is an inherent desire to give control to consumers relative to their data specifically. But this is the place where we have the opportunity to really take and accelerate. Now, the comment that we have here is that times of uncertainty provide those who are bold enough the opportunity to accelerate beyond their competitors in delivering experiences consumers need and expect. And I want to talk about this for just 1 second, because I think this is a really, really important concept that will differentiate us. Typically, and if you are disagreeing with me, then I'm so grateful for this, and I expect to see amazing things happen by the end of this year. But typically what happens is when we head into times of financial uncertainty, financial institutions take a wait and see approach. They want to just hold and see where things go. We look at it and we say, well, we're not going to invest here because we're hedging against, and we're anticipating, we want to minimize the impact to revenue and to growth of the organization. So we immediately manage that by expenses. So we won't invest, we won't expand, we want to kind of wait and see what happens with our customer base, with our communities and our markets. And the result is that if everybody is pausing, then if any one of you is actually moving a little faster down that path, by the time you come out of this freeze, if you will, and we start thawing and we're all kind of moving again as a whole group, you will already be that many steps ahead of the rest of the population, the rest of your peer group. And so when we look at that, it's important that we understand that with open finance, we don't have, there isn't regulation yet that's been defined deeply. We know it's heading that way, and there's a lot of individuals and organizations working towards that, which I think is appropriate in this case, actually. So I think it's important that we have some guidance there. Secondly, that's one thing. There isn't regulation there. There's components of this that it requires us to be good citizens in our own industry and be thoughtful of what it means, again, to serve that consumer. And then you layer in things like we're talking about now, like this pseudo recession that we're in, and the inflation that we're definitely dealing with, and the impact of that to customers, and what it's doing to behaviors, and how we adapt and adjust. And so as we think about all of that, this is one of those where it's easy to say open finance is something that we can put on the back burner because there's no immediate push. I remember talking to someone about this, and they told me that they had spoken with a large financial institution. The institution told them, look, there's sticks and there's carrots. And right now, relative to open finance, there aren't any sticks and the carrots aren't very big. Well, this is one of those components where open finance is an element that will provide a foundation for capabilities that you will need. Again, going back to the customer expectation and experience piece, this will get you in that place. And just to prove out the point of this, right? Only 11% of financial institutions report that they've deployed or delivering at scale. Open finance helps accelerate that and provide more of those capabilities. So, and then the other is 82% of financial institutions are only partially deployed or less matured relative to their open finance capability. So these are the things where there's, again, opportunity. If everybody else is going to slow, your opportunity to accelerate beyond this is the time to do that. And it takes bold leadership to be able to do that and carry that message forward. It takes vision for the development of that strategy and then the execution. And it takes vision from the leadership. This is truly one of those things where you need a CEO who's going to be willing to champion this and endure, because it will not be something that you see results in 1 to 2 or 3 quarters. Like, it's going to take some time to get going because it's a whole new space. So as we think about this, just some takeaways, right? Prepare for open finance because it provides other enabling technology and technical capabilities. Know where you are and what makes sense for your organization and for your customers. It doesn't mean that you have to do, like every community bank has to do everything that Bank of America or Chase is doing. However, what does make sense for your community and for your customers? And then move forward intentionally. Be thoughtful about it. Don't just run out and say, well, open finance, I've got to have something, because that's going to be if we don't plan now and be very intentional about it, what's going to happen is we are going to start seeing some sticks, or we're going to see some really big juicy carrots that someone's going to be really enticed by. And we're going to run at it in a way that's going to be much less inefficient and won't actually get us the results that we're looking for and turn out to be a disappointment. So those are the things we want to be thoughtful of. So be intentional, set the right expectations in your organization where appropriate with your shareholders, with your customers, and then be very thoughtful about that approach.
I think this is one of those where, you mentioned at the top, David, where these trends are going to be not revolving, but it's going to be very fluid. They're going to be maybe not flexible is the word, but it is going to be a consistent movement here. And I think when I look at all of these trends, for me, open finance is one, not necessarily a sure bet, but we'll talk about labor shortage. We'll talk about payments. I mean, TikTok is something we're going to talk about, and it seems like new legislation is coming out on that every week. To me, in my eyes, it seems as though open finance of all of these trends is the one that you as an attendee should be laser focused on, because as we shift more digital and more information becomes available, this is only going to become more inevitable. So in that sense of the trends, this is one where, as David said, preparation for open finance and knowing what it makes sense for your organization and to move forward intentionally, it's so important because of all the trends. It feels like this one is on that track to come to fruition at some point. And when it does, we want to make sure that we have those juicy carrots ready to munch on. I love that analogy. I'm stealing that, by the way. I hope it's okay.
Yeah, it's a good one. So the next one we're going to talk about is payments. So payments is one that's, it's fascinating because there's a lot happening in this space. For a long time, this has not moved. It has not been something that has been very dynamic. We've seen expansion and growth. We've seen consolidation of service providers. We've seen some innovation in the sense of, you think about card payment processing and merchant services. You see groups, like Square and Clover and others coming in and providing really amazing technology to the masses in a meaningful way. Those things, Venmo, those things are great. But ultimately, at the core of it, the technology has really still been the same. And that's an area that I feel like that I see is going to be changing in this space. So let's talk for a second first about real time. So we have FedNow, if you're unfamiliar with this, right? This is the Federal Reserve's answer to moving ACH payments and batch processing into a real-time mechanism. So they're going to offer this as an alternative, an additional payment option to financial institutions. So you'll have traditional ACH, you'll have FedNow, which will give you those capabilities. The interesting challenge is that this is another one of those technologies and those advancements, because we're so entrenched in the United States anyway, in this space of the centralized clearinghouse, that in order for this really to get momentum, it takes all of us to get there. And it will become a competitive disadvantage at some point when you can offer truly real-time payments, but a competitor cannot, or vice versa. They have the ability and can offer that, but it still requires that we as a network work together on that. There's also an advent. If you haven't heard of them, I encourage you to look them up. They're a company called Banked, spelled properly, not with missing vowels like some fintechs like to do. But they're a company out of the UK. It's probably why it's spelled properly. But they do bank-to-bank payments. They've recently announced a partnership with Bank of America and some large retailers. And essentially what happens is you go to a terminal and you have the option of your debit and credit or direct bank-to-bank transfer. And what that means is the payments don't leave this closed network. And it's going to disrupt a pretty substantial portion, has a potential to disrupt card rails and provide the value of immediacy that the card rails address without the risk of an ACH batch process, which is really the world that we're all living in. So looking at that's something that you should keep an eye on and be aware of. Again, I think you're going to see these happen. This is one of those that's really going to, they're very strategic in their partnerships and going big first, which they need to get volume. And then it'll be something that will move into our community and regional financial institutions. But don't ignore it. Be aware of it, because when it does, you don't want to see customers leaving because a Bank of America or Chase or Wells or someone larger actually has that capability that you don't yet. So just something to be aware of there. And I did talk about real-time payment network dependency. Like that's one of the things that all of these are really looking like. That's just going to be necessary as we work through it. Other things to be aware of is cryptocurrency. Despite everything that's been happening with FTX, and that is not something that's going away. It is it's a payment and channel that people have adopted at a massive volume. Even though it started first primarily because of the investment opportunity. I mean, that not initially, but that's where it really blew up, was the ability to actually gain value out of it as an investment tool. But the reality is that it's here. And so how does that look for your organization? What does that mean? And there's tremendous providers out there to help bring that kind of capability. But at the very least, your financial institution should be prepared to help your customers understand it. Your organization should know what this means and how how it interplays with the traditional financial services industry and our current networking. So be aware of that. And buy now, pay later. This is another one where it's had some bumps. It took off and people seem to love it when they do, but it's got some challenges that they're working through. To me, it's one of those really great examples of how when you take and offer a service, you pull a service out of a regulated industry and you deliver it in an unregulated fashion, you end up with, or you're on the very, very edge of the regulated components of it. When you scale that at volume and scale it rapidly, the cracks expose and the challenges and gaps become exposed. So I think this is an area where what we should learn from this is, what is it that consumers love about it? It's the immediate opportunity to take something and purchase something that they wouldn't have been able to do before in a way that feels sustainable and tenable and that they can afford. So that is when we think about buy now, pay later, again, that's a product. I know a lot of institutions are looking at how they can offer something very similar. At the very least, you have the opportunity to help provide for those customers. If you look at your data, you'll see which of your customers are challenged in that space, and which of your customers have too many. Like the one loan by itself is fine, but when I've got 5 of them, particularly those longer term with some pretty sometimes challenging rates, that's the part that becomes a risk for you, because then your customers are unable to, if they're unable to pay, you can be an alternative solution to them. So again, awareness there, things to keep your eye on and know, but understand the behavior behind really all of these, but primarily in that one. Like, what is it what does it mean to the consumer? Why has that taken off? Well, it's because it's convenient, it's easy, it's solved a need and given them something they couldn't get before. Along with that, I would argue, comes the education to your consumers as well. Help them know why they should be aware of that, and it's not always a good idea to do it every single time. So just some things to be aware of there. And I alluded to this, when I talked about FedNow, I talked about bank-to-bank transfers in particular. Interchange, it's an area where interestingly enough, so many small businesses using merchant services and card payment rails to process, like they're feeling the pinch of interchange fees at the small business level. And it's becoming, I was a little surprised a few months back where there was actually the Journal from the Wall Street Journal podcast, they were talking about, I was surprised at how aware normal consumers were about what interchange is and how challenging it can be. But I think that there's an element there where, because it's at risk, you're going to see, and because banks get value from interchange as well as our large card and network providers, I would expect to see some fights around trying to preserve that. So a lot of effort, let me say it this way, a lot of efforts to preserve that, maybe not fights, but we'll save that for the politicians. But there's going to be elements in there in which we're going to see an effort to retain it. And then you'll see, like I say, companies like a bank who are going to come in and offer to a financial institution an option that still preserves some of that and encourages them to shift. But again, like that's an area that I'm watching. You should as well. It's going to be interesting to see how that goes, because it now is, like I say, consumers are aware of it, and we are definitely in an environment where advocacy is a big focus for even our consumers, and so they want to know, are you looking out for them? So a lot to come, but just know that again, this is things that consumers are aware of, that they know, that enhances their experience. And so what's our role? Is our role, in some cases, it's just to educate. In some cases, it's to provide an alternative. And in other cases, more broadly, it's to actually provide those services to our consumers and to our small businesses.
And I think just to kind of cap off that point there before we move on to contact center, it kind of reiterates the point, and everything that we're talking about is all grounded in solid quality consumer communication. Being able to know what the demands of your consumers are to have those payments available. We can go all the way back to the contact center. Or where you have contact center next. We can go back to the consumer experience. Everything is grounded and rooted in being able to have that transparent and quality communication. When you're in touch and in lockstep with what your consumers want, that's going to allow you to be more flexible and be more available. So just one thing that I wanted to plug there before we hopped into contact center, which is all about member and customer communication.
For sure. So this is interesting, and I love. I'm just gonna move right to it. I love the slide here. We talk about the trend for me is really important. We see obviously, we see this dip in November, and you see traditional standard dips in recession periods, like you can see in 2008, 2009. That's typical. But what's interesting is, and this is why the talking heads have not said we're in a recession yet, because this has not occurred. What you see happening in that 2008, 2009, that dip in labor and employment has not occurred. And that's been an interesting and somewhat perplexing challenge. And so we're not seeing that occur, which means we still have to be very thoughtful about it. But more than anything, it really is a component of, and in some cases, like to the point on our second bullet point here, that there are fewer people participating. But for those actively looking for jobs, and we see growth even in the last quarterly, and it was a quarterly or monthly announcement around the jobs report, it was up surprisingly, and it perplexed markets in a pretty meaningful way. So just any thoughts, anything you want to share on this one here, John?
Yeah, I think this is such an interesting topic. I've been doing a lot of research on this, and actually gave a talk at a convention earlier this month, or earlier in February. It is March. I have to remind myself that. But I think the labor shortage and the way that we talk about it, the statistics behind it, it's very easy to say, oh, it's a tight labor market because there's no jobs available. But David, as you just said, that's not the case. I was just reading a phenomenal article on CNBC recently. We don't have the statistics out because February just ended, but we're 18 months in a row of record job quittings. And 72% of millennials and Gen Zs say they are going to quit their job this year. I love my job very much. I'm not in that group. I will be here with LGBT forever if I could have it that way. But the one big thing to note is when we talk about a labor shortage, it's not so much that there's not jobs available. It's rather the place that you have, the business that you have, is it attractive enough for someone to go and work for? We'll talk about TikTok a little bit in a second as well. But if we look at the influencer marketing space, which has been valued at over $1 billion, if we look at what it takes to bring someone to work with remote working options, hybrid working options, I'm in a WeWork booth right now. That's why you've seen the light flicker a couple times on me here. But from a job perspective, you have to turn your business, you have to turn your financial institution into an attractive place to work. The reason we are at this juncture of a labor shortage is it's not so much that there aren't jobs available, it's that people don't want the jobs available. If your job falls under that category, people just aren't going to work for you. We're at a juncture in life where, as we saw, 25% of unemployed people said they haven't returned, they can't return to work because in-person employment is preventing them from working. That's not to say that they don't want to go back to work. That's not to say they can't go back to work, but they have something pressing and they've seen in a remote environment that they can work, but for whatever reason, they can't do that now. And so it's less about, do you have the jobs available? And it's more about, do you have the tools and do you have the elements in place that attract people to want to come and work for you?
And I think that and the reason that's the part that is the critical component of this conversation, right, Johnny, is that what that means is for the jobs that you have to offer, you think about entry-level jobs, tellers, contact center, which we'll talk here about, but these are the elements in which I can't as a Gen Xer, I can't have the attitude that, well, these kids need to, I had to work really hard and I was fine making, whatever, $8, $10 an hour. Like if I could have made that much money when I was there, this is not, you cannot take that perspective, because if you do, here's the thing, so I have 2 college-age kids, and they have so many more opportunities available to them to go work and make $30,000, $40,000, $50,000 with us. You could be considered an influencer on social media and get a few sponsors and get some revenue out of you start duplicating on, because now we've got people who have preferences to a social media platform. So you have TikTok, you have Instagram, you have Facebook, you've got LinkedIn now, who's become much more than just a business driven platform. I mean, that's still the sort of the core foundation of it. But guess what? There are people there who like to read things and like to be informed and like to be inspired. And so if you can do that across all of those channels, then, I mean, you end up with Gary Vaynerchuk, if you look at the things that he puts out there, and he talks about making that available. But these are people who are making $30,000, $40,000, $50,000, $60,000 a year, working a couple of days a week, and then living their life out of a van crossing the country or in Europe. Or, the reality is that we have to think differently. And there's some of the work that needs to be accomplished that does have to be, it's very constricted in terms of its flexibility in either location or education requirements or otherwise. But we have to be thinking differently about this. We have to be considering, how do we attract a generation of workers that inspires them? Because we haven't touched on that. You need to be inspired by the work that you do. And there are places where, and that's a requirement for people. I just needed a job that I could use to pay my bills, right? That's how I started. And that's how I made decisions about where I would go and how much I would get paid. And today, people are like, what kind of impact are you having to the environment? How are you helping social issues? What are you doing from a sustainability perspective? These are all considerations that organizations have to be thoughtful of. What does your DE&I strategy look like? Those are the sort of things that, if you're not talking about those things, you have to, because we are already in an industry that's seen as old and stuffy and disconnected. That's not true of everybody, but there certainly is that attitude that we have to be thoughtful of, and we have to be much more intentional about how we approach it. So, just not clear answers on that, but again, it's about figuring out what makes sense. Talk to your employees, see what they want. Talk to your kids, see what they're looking for, because that's the reality of the world we're moving into.
100%.
So that brings us to contact center. So here's an area that has historically been seen as a customer service channel, but contact centers, they if you think about how many calls your contact center gets on any given day, they are contacting and connecting with more of your customers and members than any other singular channel, except maybe your digital channel, right? So you have your digital, and then you've got your call center. But the ability to actually talk to and resolve and help your customers or members, this is the group that's there. It doesn't have to just be, and I think there's been a lot of movement here, and this is a combination of technology, culture, strategy, and education. But it gets back to, what are we doing to create a better environment for people, instead of just being on a phone and getting yelled at all day long and trying to solve issues and being unempowered, if you will, like not having the capability to actually solve the customer's problems, but empowering them to work and solve the customer's issues, focusing on statistics more than just average call time reducing, but let's actually talk about first call resolution and actually talk about satisfaction and connection with customers. This is where there's the opportunity. And for me, I think that the little visual that you see here, this is the bridge between that human to digital connection. This is where they're not going into a branch because they're not necessarily wanting to do that. They like the convenience of a call, but they also these are people who are leaning towards that. This is the group that is that kind of in between the branch and sort of all digital environment. I say that, but recognize also no customer fits exclusively in just one channel. So we see that working through that. But so there was this, I found a statistic on here that talks about how 71% of contact will be done via digital email and messaging primarily in 2023. So what are we doing, and how are we facilitating, how are we preparing our organization? In an area where we have the opportunity to expand relationship, most financial institutions are looking to increase their deposit base so that they can then make more loans. Well, this is a group that's talking to customers. How do we do it in a way, much like we talked about before, of do you know your customers? How do you know that you're making the right offers and talking to them about the right things, giving them the right guidance and insights? This is a group that can do that in a very personal connection.
And I think the only thing to build on top of that, just to plug Entropy a little bit here, and being able to communicate with customers and being able to have that quality connection and conversation, we go back to customer experience. If you have somebody on the phone and you're able to resolve that, how can you boost that experience? What can you do to make that better? We all do what we do in this industry because we genuinely care about the people we serve. I'm convinced of that. I've been here for a few years now, and being able to work with industry leaders across the board in the financial space, people do what they do here because we want to help people with their money. We want to enable people to do better with their finances. So if we're getting people on the phone, we're having those touch points. We know phone calls are tough. We know emails are tough. We've seen a lot of success on the Elstree side and just in general with text messaging. If we're able to get that connection, how can we maximize that? What can we do to build on top of that? Because not only is that going to serve you and your team from a revenue perspective, but you're also serving the consumer. It's all grounded and based in serving your customers and your members. And that's really the key critical component when it comes to thinking about your contact center as a revenue center. At the end of the day, it's grounded in wanting to serve your consumers better.
And I'll say that this is one of those areas where when you're talking about such a critical component of your organization, this is definitely an area, and it should always be the question of, and it is, and for a lot of organizations, should we do it ourselves or should we partner with someone? This is an area where I would argue like the need to make this change is a partner, because you want to see this happen rapidly. And so you want to be able to pivot, and there's so many complexities that come with the element of your staff and your employees, strategy of the organization, again, inspiring and getting buy-in from executive leadership. These are all elements that a strong partner is going to help you address, and then prove out that the ROI of that investment, and actually demonstrate that the vision of creating or transitioning to a revenue center is real, and it happens much faster than if you were to do it on your own. So
absolutely.
I'm convinced that in school, there were classes that saved like the really exciting and sexy topics for the end of the term. And I feel like that's what we've done a little bit here, Johnny. Like we're putting TikTok at the end, but we're going to end with fraud. So I'm not sure how that goes. I mean, maybe that'll backfire on us, but TikTok is one that this is definitely an area that is, it's polarizing because we're so regulated, because we oversee so much data on our customers. There's a risk that for all of the concern of the TikTok user data being consumed by bad players, I think that the reality is that this is a situation where TikTok is the currently most beloved app out there relative to social media platforms. It's seen the most growth. The algorithm in it is extremely effective. And I find myself frequently getting pulled into I don't even necessarily follow anybody. I have my kids that I follow, but I don't necessarily, there's a few people there, but I just flip through my For You page. Like I just go through and watch things, and I'll click into it. But the reality is that this spans generations. Obviously it's more targeted towards, there's some generations that have adopted it in greater number, but the reality is that this is where we need to go. Like we need to go where our customers are. And think about it in this way. I heard someone speak last week about millennials. Now, if you think about the conversations that were had both as a millennial yourself and as an older generation, the baby boomers, the Gen X, there was a lot of despise for the millennials, and they don't want to work, and what's it? Well, guess what? The millennials are now saying that about the Gen Zs, right? Like it's an element of there's a cycle that each generation goes through. And guess what else? The millennials are the ones that have all the money. So if you weren't talking to millennials 10, 15 years ago, they likely have found relationships with someone else if you weren't the one to help them. And I'm going to tell you that is a cycle that will continue to repeat itself with every new generation. So if you don't have process and a strategy around providing and understanding the financial needs of the younger, new adult generations, even the teen generations, kind of pre-adult, if you don't have a strategy for developing relationships early in that space, you really need to get that in place, because now more than ever, the generations that are coming and will continue to be much more discerning. So you've got to meet them where they are. You've got to be in front of them. Otherwise, somebody else will be. So you can see a ton of statistics on here. Number of most downloaded app, 1.9 billion videos. This talks to the crypto piece. So let me say this. Actually, I got a little bit off track, but I want to say that one of the things that is challenging on this is that there was, I read a statistic that talked about how a large percentage of people are going to TikTok for financial advice, looking for something in the neighborhood of like 18 to 25-year-olds. It was like 47% had gone to TikTok for financial advice. And when you expanded that from 18 to 40, so moving into later millennial, early Gen Z, you move into that space, and the number was like 25%. So there's a fair amount of people who are going there looking, and the proof of it is in these things. You see 93,000% growth in popularity of investing related TikToks related specifically to crypto and NFTs. People are going here because they don't know what it is. They want to be educated. This is where I point back to what we talked about a little bit ago, where what is your role? Is your role to educate people on what NFTs are and what cryptocurrency is, help them understand the risks that are there. And we hesitate because there isn't any regulation that tells us that this is the proper compliance that we have around this kind of advice. But to a certain degree, there's some things we need to be doing better and doing more of. And the one right below, 1.9 billion #crypto videos have been uploaded. And this has been a couple of months now since this data was pulled. So I guarantee the numbers have gone up. 30% of the world's internet users are on TikTok, 2,700 minutes every month. Average user time spent. That's 90 minutes a day. And they spend on average 11 minutes per session. If anybody's in marketing and you're trying to figure out how long somebody spends on a page, like if you want to get their eyeballs, here's the place to go. I'll give you, and I get pulled into this. So I'm like a perfect Instagram, TikTok, like social media customer, because I was flipping through TikTok and I love this. Paris Hilton comes on and in my For You page, and they're talking about, listen, to be clear, like Paris Hilton is not like in my algorithm. Let me be clear. It's the last part of that. It's the Hilton part of it that pulled in. But they started out and they opened up with, would you sit through a 10-minute TikTok video for the chance to get, and they listed off a bunch of miles and or hotel points and free stays and a bunch of swag, right? They do that. And then I proceeded to watch this video for 10 minutes so that and it was super entertaining. Like it was a whole bunch of these kind of mini clips of different performers, actors, artists, and others who were talking about their experience with it. And then at the very end, like they called out the irony of nobody, like you're in their room and nobody's going to sit for 10 minutes, but they'll sit for 10 minutes. And then they kind of looked right at me and said, but you sat for 10 minutes. So the reality is that if you want to get people's attention, like it's not hard. You just have to be there. I don't pretend that there aren't risks that you have to address and that you'll have hoops to jump through. But the reality is if we don't start developing strategies to go where our customers are, where our future customers are, then we will end up in a place where our relevancy is severely diminished. So I think that's probably the most important component here is people need information. They always have. We've not always done a good job, or we reserve that sort of expertise for our most valuable customers. The reality is that all of our customers could benefit from guidance and help, more so now than any generation previously. And I don't mean that as in a specific generation. I just mean the time that we're in now is more vital. The world that we live in, it's more vital to be able to provide and give easy access to financial education in bite-sized, actionable ways, more so than it was in the past. My mother-in-law still balances a checkbook. She's the only person I know that still does that. She doesn't need help balancing her finances. There are others that do. And so that's the part where when we think about this, it really is about, this is a long game strategy. One, creating meaningful content. And this is where you can leverage some of those younger generations. This is the area where there's a massive opportunity for us. There will be regulation. I don't expect TikTok is going to go anywhere. It may see it diminished. But when Apple stopped Google and others from, tracking people for advertising purposes, those are still viable channels. So it's not as big as it used to be, but it's still viable. This is a similar thing, even with regulation, unless it gets shut off completely, which I can't imagine, but it's always going to be a viable. And it's TikTok today. Tomorrow it's going to be something else. So just an awareness there and some thoughtfulness around this is something you can't and should not ignore, and it is worth the work that it will take to get your risk and compliance teams on board and address their concerns, because this is an area of future growth for all of us.
Oh yeah. And as you could probably tell, audience watchers, by my baby face, I do definitely fall under that Gen Z category. So I'm always super excited to talk about TikTok. And on the surface, it's like, oh, another Gen Z, you're talking to me about the importance of TikTok. But, David, I think you broke it down perfectly. It's about information. If you aren't giving that information, they're going to find it somewhere else. There's, as we see, 1.9 billion crypto videos have been uploaded, and that number is definitely higher as of now. TikTok is a very active platform, and people are active on there. If you, as a financial institution, and you want to be a leader in your financial space, you want to be a leader for your customers, for your members, if they're not getting their information from you, they're getting their information from somewhere else. So how can you step up into that sphere and be that leader? The other thing that I hear from people around me,
Johnny, I'll say really quick to that point, it also means that they'll get their services there.
Exactly.
If they're getting the information from somewhere else, they're going to get that service or product there as well.
Because that builds that trust, and that's what they really want. The other thing that I'll say on top of that is when people come to me and say, well, how the heck do I even start a TikTok? What do I do? There's, like you said, there's risks. What can we talk about? Keep it as educational. Meet consumers where they are and be their guide. The two things that come to mind for me, the main thing is the financial literacy. The 50-30-20 rule, something like APR. How can you educate people on what these things mean? I know for me and for myself, it was I learned about the 50-30-20 rule because I went out and learned about it after my mom had mentioned it, and I had no idea what the heck she was talking about, and I didn't want to seem like I was silly in conversation. I went out and did that research myself. But how is everyone that's watching here, you have members that need information. Writing blogs are great. Sending email campaigns are cool. But as we know, those don't get the eyeballs that they need, and they're not getting the attention that they need. That's not where you're reaching that younger membership base, which is growing and going to be a major factor going forward. So how can you be prevalent on those spaces? How can you make yourself that thought leader? And the other thing I'll say is I saw a phenomenal TikTok from a small credit union. They put a phone inside of their mobile deposit drive-through. The phone went through the little mobile deposit window and arrived into their branch. That was the entire TikTok. It doesn't have to be crazy edited. It doesn't have to be super detailed and in-depth. It can be your team dancing. It can be a silly viral trend. It just matters that you're there. If you have a presence, and it's like an online review, it's like any social media platform. If you are there, you're prevalent, and you show that you care about that base, that's what's going to make that most impact from there. And I know that we're running close on time, and kind of on the flip side of talking about happy TikTok, this is definitely a trend that I know that we want to get to. So let's talk about fraud. Let
me add one quick thought to what you said, Johnny. It is that you can move it forward, but I think that it's the two things. One is you said, here's another Gen Z or we have to talk to that group. If it's a bunch of older people in a boardroom making decisions about what their younger customers want, we're going to fail every time. You've got to talk to that group. So that's an excellent point there. All right, yeah, let's jump into fraud. This is something that is this is a hard topic. It is increasing in substantial ways. So we looked at losses due to fraud in 2020, the full year 2020, 3.4 billion. 2021, that increased substantially to 5.8 billion. Just in the first half of 22, it was already at 3.6 billion. So it surpassed all of 2020, well on track to increase from 2021 by 100, by another 50% above at least. And I would suspect that it's even more because you see end of year tends to be a little bit more around the holiday. So just be thoughtful of that and know that that's an area. What that means is financial institutions are spending $4 in attempts to monitor and prevent for every dollar in fraud that they experience by consumers. And if you're running a business, most people would say, well, stop that. That's ridiculous. There's nothing we can do here. Well, the problem is that we have to. There's substantial regulation that drives it, but there's also an element of we can't be the ones, nobody's going to be the one to tell customers that they can't, that we're not going to cover their fraud or we're not going to help them. So how do we get there? If we think about this as fraud increases, I think there's a couple of things we have to think about. Like and this is why the bad guys are always winning. There's always new instruments and new schemes. If you look at the visual on the right, there's always some new way that the bad guys are thinking of. And it's always been said, if the bad guys would put as much energy towards like legitimate business as they put to their fraud, they could be super successful. Well, the reality is they're being super successful and not having to work as much, and they don't have a boss, right? Like, so there's a reason why there's people that are still doing that. But the reality is that they're always thinking ahead, and we are always catching up because we don't know what the next scheme starts to look like. Then when you see things like a global economic downturn, or we see a pandemic, like as people are feeling more anxiety and stress about their finances, they become more susceptible. You also have the increase in digital connectivity, and it's feeling like you can trust those these people as they use data to understand their targets and have ways to socially engineer people that then creates the result of this increased sophistication in terms of the type of schemes that we see, and then it just continues the cycle. Interestingly, though, while the delivery and volume of these are increasing, it still comes down to the ability for the bad guys to make a human-to-human connection, even if it's digital. Like, it doesn't mean that it's not still a human-to-human connection. That's what it feels like to people, and so that's what results in this. So there's a few things to think about. Like, if your organization still feels like, well, we're going to reduce fraud, no, you're not. You're going to hedge fraud. You're going to try to slow down the increase of it. You might have a month or a quarter or a period in which you do see a dip, but the reality is most organizations are going to be year over year going to be there. So the key is that this is an area that, again, from a partnership perspective, technology is advancing so fast. Your organization, unless you are a fraud monitoring organization, you're going to need to rely on partners to make this work for you.
Absolutely.
That was a lot to go through, Johnny. I think we did okay there. What closing thoughts do you have?
Yeah, I just really quickly, I did see one question come through from Michelle Young about, and this was back on the payment. So apologies, everyone, as I click back through. But as we go here, the question was, are the bank D transactions performed at an ATM? And I think you were referring to that British company that was talking about the bank-to-bank transfers.
Yeah, it's I don't know that they were looking at ATM networking. They were looking at it at a point of sale terminal. That's their first experience there. So I would imagine at some point you may be able to see that accomplished, or even virtually as well, in much like a P2P. Once that network is expanded, I could see that occurring. But no, they were talking primarily about point of sale, but working again with large banks and large retailers to begin with to get the network really founded. They've established themselves in Europe and in other parts of the world. So this is their first entrance into the U.S.
Okay. Fantastic. Well, I think I definitely want to get wrapping up and rocking and rolling here. But I do want to say thank you to everybody for joining us today. Once again, I know everyone's schedule is super crazy. I have a flight to catch in just a bit, but that's not the point. The point is that everyone is here. And if you came here, we're very, very appreciative that you are here. We went over some fantastic topics, and I hope you were able to glean some phenomenal information today. The big takeaway, from my opinion, is be flexible. Everything that we talked about today is going to be consistently moving, some parts more than others, but every single portion is going to be moving. And the other takeaway that I would mention is don't be afraid to go digital. As we start to traverse more towards this digital space and adopt more digital capabilities and have more information due to digital channels, this is the forefront that's going to allow us to break in and grow that membership base. We talked about hanging out with your fellow Gen Zers over here. Don't be afraid of that final frontier. Know that there are phenomenal partners like Eltropy that will help you embrace those challenges, and just be sure that we are here to help you in lockstep in every step of the way. And I'll kick it over to you, David, to close it out.
I'll just say this: you're closer than you think you are. The reality is there's a lot here, and there's a lot to tackle. But you've got the core foundation. Just knowing you've got customers, you have information on them. You're closer than you know that you are. So give yourself a little bit of grace relative to that, but make sure that you are moving intentionally towards that. It's a big hill to climb, but it's necessary for us. So, but we're here. If you have questions, please reach out. Happy to chat with anyone about it.
Absolutely. Well, thank you so much to everyone for joining us today once again. This was an absolute pleasure. David, it's always a pleasure to get to talk to you. And for everyone that is watching, enjoy the rest of your lovely weeks, and hopefully we get to all chat very soon.
Thanks, Johnny. Bye, everybody.
Bye, everyone.